Folks, welcome back to Crypto Kings. My name is Matt, and in today's video, we're going to be talking about everything that Shiba Inu has been doing here over the past day. So if you guys are new, make sure to drop a like and subscribe for more daily SHIB vids, and let's get right into everything, folks. So if you guys have not already seen what we are working with here on the day, we are up around 1%, which, you know, basically a neutral break-even day. Our market cap here creeping up a little bit past the $24 billion mark, keeping us here at rank 12, of course, on coin market cap. In terms of volume, we're up around 5%, which again is sort of like a break even in terms of the volume here over the past 24 hours. And low volume like this is not necessarily a bad thing. There are a lot of people who think that, you know, as the volume goes down, you know, oh my goodness, it's becoming irrelevant. I personally don't subscribe to that, because when we look at our historical data, again, you guys can see there are days here in which the volume is literally at 40 or so billion dollars. Again, same thing, 10 billion, 12 billion. So with a lot of these days, the thing is, we need this decrease in volume here to kind of just chill out sometimes. You know, this decrease in volume is showing that, yes, we are stable at this price, that people are not flash buying and flash dumping and creating all this weird volatility. The fact you've been able to avoid that, I would say, is quite good. Now, when we take a look at our graph here, of course, there is a lot to unpack. But before we do, guys, make sure to check out Webull. Top link down below in the description if you guys want to get started trading stocks. If you guys sign up, you guys could get 2 free stocks valued up to $2,300 just by using my link at the top of the description. And of course, if you guys use it, I get a couple free stocks as well, and I always do appreciate it, folks. So let's take a look at our graph here on the day and kind of get into what you guys should expect for the near future. So what I am seeing here is what really, again, like I've been talking about with you guys, I theorized that after looking at this, we were seeing an inverse head and shoulders, because we had this bottom here, and of course we had the left shoulder here, and we had the right shoulder. Now, the issue with drawing a head and shoulders chart like this is that it doesn't actually fulfill what an inverse head and shoulders would do, because instead of having a bullish breakout, instead of having something like that, the result of this pseudo inverse head and shoulders is this decline, is this sloping here, which really should not be happening, because in an inverse head and shoulders movement that was really accurate, we would see something like this. We'd have a neckline in which we would have to break through, and once we did, it would be bullish from there. So the idea is, what happens now? Well, instead of trying to define this as a broader or, you know, more wide movement, I think it is definitely worth looking at what we can see from a historical perspective from really, I mean, God, we could go all the way back if we want to. We could start all the way here from the 28th and really say that, yeah, you know what, man? This looks like just a good old, you know, falling wedge here, man. And you guys can see that really it's kind of what it does look like. And again, there are a couple of, you know, periods of time in which you could say there is an exception. You know, maybe this drop here on the 4th was a little unpredicted or unprecedented, but I would say overall, you could fit these constraints within a falling wedge quite easily, because you guys can see the highs here are decreasing, and then of course the lows are decreasing, but at a slower rate, at a much slower rate than the highs are decreasing. And essentially what this means from a data perspective is that this is typically bullish. I mean, you could go and look at any crypto asset out there. If I wanted to scan any asset, I could look at it over, let's say, a year, even with Ethereum. Boom, falling wedge here from, like, you know, say the 24th here all the way down to the 18th here of July, you know, falling wedge from here to here, boom, breakout, you know, same thing here, boom, from the 5th all the way up until probably the 27th, same thing, falling wedge, breakout. You know, you could look at any asset, and if you really were to, you know, deep dive, you could definitely find a lot of instances in which a pattern like this occurs and a bullish action is created as a result. When we check our indicators, of course, which I always like to do, you guys can see the relative strength index here, of course. Once we hit our little high here on the short term on the 19th, we hit around 51. You guys can see it overextends past the 70 mark on the relative strength index, meaning that yes, it is a little bit overbought. There is too much buy volume here and not enough sell volume to balance this out. So you guys can see that after that happens, of course, we see a bit of pullback. Then earlier today, there is an attempt to go from 43 up to probably, you know, 46-ish or so. That 46 gets somewhat rejected or not not followed through with, and we end up again facing this decline, as the relative strength next year stays relatively on the lower side, hanging in around 42, 43-ish. Right now, we are officially around 44, meaning that the relative strength next in the middle. So it is considered that right now, 44 is going to be the most stable price, not being oversold, not being overbought. Based on the current market conditions, this looks to be the most stable, right around 44. When we check the Fibonacci retracement, which you guys can see I always do on these videos here, we are going to track from the top and the bottom of the most recent run. So we have a top of around 46 and a bottom of around 42. And essentially what we are being given from this is that the 23.6% line, which you guys can see right here, the 23.6% line looks to be a line in question. So this current candle here could very well keep going up and keep, surpassing and establishing new, levels of support. But in a more realistic case scenario, I would say that we are going to fall back on the 23.6% line, leaving this as a line of support going into the near future. So again, the line of support's around 43.50, which, really would not be bad. I think in the short term, that is definitely fine. Is it possible that we do not stay above the 23.6% line? Sure, we could head back down to the zero line. Of course, that would be around 42.50, and we would stay right around there and, could bounce around after that. So all around, again, I definitely don't find that to be particularly tragic. I know a lot of people would, prefer to see this higher, but for, the given lack of, social media kind of hype going on right now, relative to what we saw a couple of weeks ago, I don't think this is anything particularly tragic. When we check the MACD, you guys can see we are being given basically a neutral, slight buy, but basically a neutral sort of stance here. Again, you guys can see when we go back to the 19th, it was an overwhelming buy as we saw this surge up, and then again, it enters the sort of, bear phase, again, has a potential for some resurgence here on the 21st through the 22nd, early on, entering the green again, but now basically neutral, basically even, which is all good. So with that being said, guys, thank you for watching the video. Make sure to drop a like and subscribe for more daily SHIB vids if you guys have not already. And check out my Twitter, folks. Here it is. You guys can respond to awesome, cool tweets like this. Matt Garbarino here. Definitely enjoy talking with you guys over there. And, I put out threads like this all the time. I'll talk about, events going on with the channel, with the Discord, all that good stuff. So again, Matt Garbarino here over on Twitter. It would be, my pleasure to have you guys over here on the account. So definitely go ahead and check that out, Matt Garbarino on Twitter. And of course, make sure to check out Webull, guys. Top of the link down below in the description. If you guys want to possibly get 2 free stocks valued up to $2,300 for signing up. And of course, you can trade stocks, crypto, including Shiba Inu on there. They do have SHIB at the moment, unlike Robinhood. So if you guys want to get started, Webull is at the top of the link in the description as well. So that means everybody, thank you guys so much for watching. My name is Matt, and until next time, folks.